Hi all, my name is CA Rohan R. Pingri and welcome to my YouTube channel CA Rohan Pingri. Today onwards, I am going to start a video series on direct tax case laws. Yes, and the reason behind this video series as a practitioner, particularly in litigations also, as we lack be updated for many times. So it is very important as a practitioner and particularly in litigation practice, we must be updated. तो ये रीजन है इस वीडियो सीरीज शुरू करने में, जो कि हमें एक वीडियो देखेंगे तो समझ में आएगा कि हाँ ये केस लॉस है, इसके ऊपर है, इसके ऊपर है। तो यही रीजन है और खुद मैं भी इस वीडियो सीरीज के वजह से केस लॉस पढ़ूंगा, उसमें से नोट्स निकालूंगा और वो मुझे भी उसका बेनिफिट्स मिलेगा। तो यही एक रीजन है। तो शुरू करते हैं। प्लीज अलाउ मी टू शेयर माय स्क्रीन। 1 minute. Yes, I think now you are able to see my screen. So let's begin. What laws says? Okay, direct tax part 1. Or in today's video, we will discuss few of the cases from ITT and high courts. So let's begin. ITAT first case, PCIT versus Mighty Construction Private Limited, ITAT 2023, Mumbai, AY 2011-12 to 2013-14, and date of order is 25th August 2023. And relevant section for this case is section 28 of the Income Tax Act 1961. So let's understand facts and issue of the case. Assessee sold flats at varied rates. AO applied highest rates for all. Assessee prefer appeal to CIT appeals, where CIT appeals allowed the appeal filed by the assessee. And then revenue preferred an appeal to tribunal. Tribunal observed and held that highest rate cannot be applied. Listen carefully. Highest rate cannot be applied. Asked to apply weighted average except one unit which is incomparable. So tribunal also held in the favor of assessee. Second case, DCIT versus Tapesh Taghi, ITAT 2023, Delhi, AY 2017-18, date of order 27th October 2023. Relevant section 69A, 132 and 115 BBE of Income Tax Act 1961. Let's understand facts and issues of the case. Assessee surrender the income from commodity trading in the statement recorded under section 132 subsection 4. Assessee offered this income for taxation in return of income filed subsequent to the search. However, tax was paid at normal rate and not the rate mentioned under section 115 BBE. AO taken the stand that income surrender is the nature of unexplained money in terms of section 69A of the Income Tax Act 1961, though He didn't make any separate addition of said amount in assessment order. Subsequently, AO passed an order under Section 154 of the Act and applied the rate of tax under Section 115 BBE. Assessee preferred appeal to CIT appeals, where CIT appeals allowed the appeal filed by the assessee. Then, revenue preferred an appeal to tribunal. Tribunal observed and held that whether special rate of tax mentioned in Section 115 BBE would be applicable to income surrendered by assessee in the course of search and seizure operations. Assessee has explained the source of income, and department have no dispute with regard to explanation of assessee regarding the source of income. Section 69A uses the word may, which implies that if explanation offered by assessee is satisfactory, then it can't be treated as unexplained money under Section 69A of the Income Tax Act 1961. That was also in the favor of assessee. Third case, DCIT versus DC Polyester Limited 2023, ITAT Mumbai AY 2017-18. Date of order 17 October 2023. And relevant section is Section 270A of Income Tax Act 1961. Let's understand the facts and issue of the case. AO noticed that rental income was reported by assessee under HP, that is house property, income from house property. AO also observed that in earlier year, assessee offered the same income under the head business and profession. Assessee offered explanation to why it is reported the rental income under the income head, income from house property. However, AO assessed it under income from business and profession and initiated proceeding for levy of penalty under Section 270A of the Act. Assessee preferred appeal to CIT appeals. CIT appeals confirm the action taken by AO, that is not in the favor of assessee. Yes. Then assessee preferred appeal to tribunal. Tribunal observed and held that Section 270A uses the expression the AO may direct. What 270A uses the expression is the AO may direct. So levying of penalty is not automatic and discretion is given to AO. It is not a case of suppressed or underreported any income. Addition has arises on account of computational methodology that is due to change in the head of income. Assessee offered an explanation which is not found to be false. If bona fide mistake is committed while computing total income, penalty under Section 278 should not be levied. That's it for the in today's first video ITAT cases. You can refer whole cases as the terms and conditions are very different. Situations are different for each and every case. So my appeal to all, refer case truly while applying to your case. Okay, let's move on. High court cases for our first today's video. Principal CIT versus CEC Soma CICI JV 2023, Karnataka AY 2011-12, 2012-13. Date of order 21st March 2023. And relevant section is Section 37 of the Income Tax Act 1961. Issue of the case. Case is in respect of whether business expenses allowable or not, that is, provision for future expenses based on turnover allowable or not. That is the issue. Karnataka High Court observed and held that provision for future expenses based on turnover amount set apart to meet future liability, expenses inbuilt in the contract, provision not contingent, allowable deduction. Let's move on the second case. Chincholi, Guru Janjar, Venkatesh, and Satish Kumar Pandey versus ACIT 2023, Calcutta High Court, AY 2016-17, date of order 16 December 2022, and relevant section is Section 48 of the Income Tax Act 1961. Let's understand the issue of the case. Case is related to whether expenses wholly and exclusively in connection with transfer of capital asset, here transfer of shares, is allowable or not. What is the issue? Whether expenses wholly and exclusively in connection with the transfer of capital asset, here transfer of shares, is allowable or not is the issue. Calcutta High Court observed and held that expenses wholly and exclusively in connection with transfer of shares, that is amount paid for professional advice in accordance with AOA, that is Article of Association of the company, then same should be deductible. Yes, what High Court is held that the amount paid for professional advice in accordance with the Articles of Association of the company, then the same should be deductible. Next, Suresh Kumar Agarwal versus Union of India 2023, Jharkhand High Court, AY 2013-14, date of order 29th August 2022, and relevant section is 276cc of Income Tax Act 1961. Let's understand the issue of the case. Case is related to imposition of penalty and prosecution. What Jharkhand High Court observed and held that Section 276cc requires mains re. Yes. In given case, it is not present. Assessee filed belated return along with interest, which is accepted. Therefore, penalty should not be levied and prosecution not valid. And that's it for today. And hope you like this video. If you like this, and hope you also means ये आपको यूजेबल लग रहा है वीडियो, तो आप जरूर जरूर हमारे नेटवर्क में शेयर करें। और ऐसे ही वीडियो सीरीज में इनडायरेक्ट टैक्स में भी लेके आऊंगा। फिलहाल ये अपना डायरेक्ट टैक्स का है, तो लेट्स शेयर विथ ऑल ऑफ आवर प्रोफेशनल कलीग्स। एंड थैंक यू so much. Thank you so much.